In this example, we're going to prepare a full statement of cash flows for this organization. So when we're preparing the statement of cash flows, remember that we want to explain this change in cash from one period to the next. So why did this cash go down? We are going to look at other changes in accounts, and we need this amount of information here. We're going to prepare the statement of cash flows using the indirect method. So one of the first things that I'm going to do is look at the changes in these accounts by just adding an extra column over here with these changes. So we already have those numbers available to us as we're preparing the information for the statement of cash flows. So what changes in accounts, and I just carried that all down. Even though we don't need all of them, we're going to use some of this information. So we're going to prepare a statement of cash flows. When we're using the indirect method, the first section, remember, is always the operating activities section. And the indirect method starts with the net income. So our net income is $114,975. Our next line, our next part is making adjustments to net income for our non-cash items. Remember, our non-cash items are depreciation expenses and gain or losses. So we get that information off the income statement. We see we have depreciation expense and a loss on sale of equipment. So we add back depreciation expense and losses, and we subtract gains. After we make non-cash adjustments, then we look at the changes in current assets and liabilities. So we have current assets, we have accounts receivable, inventory, and prepaid expenses. So first, accounts receivable. So we have a increase of $15,185. So remember, increases are subtracted. So increases in current assets are subtracted, decreases in current assets are added back. So we're going to subtract this change in accounts receivable. And I'm just going to go ahead and make that a negative number by putting the negative in there and then selecting the change that we calculated. We also had an increase in inventory. So again, with inventory, we're going to subtract that increase and put a negative number in there. And for prepaid expenses, we had a decrease of $625. So $625. For our current liabilities, we have accounts payable, and then short-term notes payable is also a current liability, but notes go in the financing section of the accounts or of the statement of cash flows and not in the operating section. So we're only going to look at accounts payable. So what was that change in accounts payable? This accounts payable decreased by $61,534. That is a cash flow out. That's how we reduce our accounts payable. So for current liabilities, if they decrease, we subtract that amount, and if they increase, we add that amount. So This is a decrease, and we're going to subtract it. So we'll add all those changes together. And then we have our net cash flows from operating activities. We add net income plus the non-cash changes plus the changes in current assets and liabilities to get our net cash flows from operating activities. Now we're ready to prepare the investing section. So cash flows from investing activities. So investing activities are our long-term assets, property, plant, and equipment, intangible assets, and long-term investments. So we come up here and we look for information about long-term investments. So we see that in all of this information that we have a sale for equipment and a purchase of equipment. And those are the two items that we have that are affecting long-term assets. So we sold equipment and we purchased equipment. So first we received money for selling equipment. This tells us that we sold equipment for $11,625 cash. So remember, all we want in this statement of cash flows is the amount of cash. All of that other information is important for our accounting records, but the statement of cash flows just has the cash. So we received $11,625. Then we purchased equipment. For this purchase of equipment, we paid $30,000 cash, and then we took out a loan for the balance. That loan is a non-cash event because we didn't receive cash for the loan, we received equipment. So we're only going to record this $30,000 cash payout for that purchase. We add those together, and that gives us our net cash flows from investing activities. The last section is the cash flows from financing. So remember, this is where notes payable, stock sales, or purchases of our own stock, and dividend payments are put. So we go back up to our information and we look for things that are affecting that. So we see that items 4 through 7 all go in our financing section, starting with that $4,000 cash from the short-term note payable. The next item is that we paid $50,125 to reduce a long-term note payable. So we paid long-term note. That was $50,125 out. Our next item is that we issued 2,500 shares of common stock for $20 cash per share. So we sold common stock, and that was 2,500 shares times $20 per share. And our last item is cash dividends of $50,100. So we paid cash dividends $50,100. We add all those together, and that gives us our net cash from financing activities. We then have our net increase or decrease in cash for the year. So we add together our cash flows from operating activities plus our cash flows from investing activities plus our cash flows from financing activities. That says that we had a decrease of $23,700 in cash. That should match the change in the cash account, $23,700. It matches. This means that we added and subtracted everything correctly in our statement of cash flow because we explained this $23,700 change in cash. The last two lines of the statement of cash flows are that we would take the cash balance of December 31st, 2014, $73,500, and we add these together, the change in cash and our previous amount, and that should equal the cash balance for December 31st on 2015. And we see here they do equal. Our statement of cash flows is done. The last thing that I wanted to go through just really quick, because it will help you with your homework assignment, is a sale of equipment when they don't give us all of the information. So here it gave us that we had a loss on the sale of equipment, what the historical cost was, what the accumulated depreciation was, and what the cash amount was. So you have a homework problem that all they get, the information that they give you is that the cost is $46,875,000 and that there was a loss. In your homework, I think it's a gain. So we had a loss of $5,125. So we're going to calculate what you do when you're only given this information about a sale. So in order to calculate how much cash we received, we need to know what the book value of that asset was. In order to determine that, we need to make a T account because the item that we don't have to calculate book value is accumulated depreciation. So we're going to make a T account for accumulated depreciation. Okay. So what we have in 2014 is that our accumulated depreciation is $46,000. So that is our beginning balance of accumulated depreciation. And we know that in 2015, our balance is $36,625. So that ending balance in our T account is $36,625. The other information that we have is that we had a depreciation expense on our income statement of $20,750. When we sell a piece of equipment, we remove the historical cost from our records and we remove the accumulated depreciation from our records. So what we are looking for to get the accumulated depreciation is the amount that's missing right here that we would have debited accumulated depreciation for when we sold this piece of equipment. So we need to find that amount. Well, we know that amount is the beginning balance plus depreciation expense minus our ending balance. That tells us that the accumulated depreciation for this piece of equipment was $30,125. So now we know that the book value is our cost of 46,875 minus that accumulated depreciation we just calculated of 30,125. So we have a book value of 16,750. Then we had a loss of $5,125. So if we add those together, that tells us that we received cash of $11,625. So hopefully that will help you with that one homework question where it only gives you part of the information